Welcome back to another video, guys, in the beginner series. This episode is going to be on candlesticks. So we are going to be looking at what are they, how we can use them, the importance of them, and if you are someone who looks at the chart and is unsure on what a candlestick means and obviously how to read the chart, then this video is for you. So the first thing that I want to do is basically look at the chart as an overall. Each of these bars is what we call a candlestick. Okay, so what I'm going to do, I'm just going to rewind to a part where the chart is not going to be moving, and this is where we go. So if we come to the chart, we have identified that each of these bars is what we call a candlestick. Okay, now why do we call them candlesticks? We call them candlesticks because if we look here, you can see at the top and at the bottom we have what we call a wick. So imagine a candle burning from either end. You can see we've got a wick at the top and a wick at the bottom, and then you have the body of the candle, which is the top and the bottom of the bar. So if we literally just do the exact same, I'm going to go into a bit more detail into this, but overall, that is what this means. So you've got the wicks and you've got the body at either end of this candlestick, okay? And as we previously mentioned in the last video when you was setting up the chart, if you look on the top right-hand corner or left-hand corner of your trading view, the 1 will represent that each of these bars represents 1 minute. If you were to click that, you could change it to 5. You could type in and go to 15, etc., etc. So it doesn't matter which candle kind of time frame you are looking at, a candlestick will always be a candle. So what I have now done is changed my chart colors to red and green, just to make it obvious for you. So if we're looking at this candlestick here, what can we identify? Now, we can identify that it's a green candle, which means the candle is bullish, which is good for buys. It's obviously meaning that buyers were in control in this last interval. The bottom of the candle, where the body represents, is the open of the candle if it's green. This simply means that the last candle here closed down there. This candle now opens where the last candle closed. Easy as that. Doesn't have to be more complicated. Price then pushed up all the way up here at one point. So this wick up here means that at one point this whole candle was, if we look, it's not going to work because of the time, but this basically means that this whole candle at one point was green. And then what then happened, whilst the time was still open, the candle pushed down, pushed down, pushed down, and then ended up closing like this. So the close of the candle body is here, and the wick is up there. Easy as that. If we were to go on to another example of the next candle, what do we see? We can see the candle opened where the last candle closed here. It at one point pushed down, created this wick to the downside, and then pushed up and ended up closing like so. Not every single candle is going to have a large wick to one side, okay? And that's something we're going to go over. But that is basically the simplistics of the candlestick. The new candlestick will usually open where the previous candlestick has closed. That candlestick will then close at a certain range, and it will leave a wick either side or just at one side. Okay, so that is basically what each of these candlesticks mean when it comes to the market. Okay, some people will look into them loads, some people won't. It doesn't really matter. Okay, so if we are looking at these candlesticks, the candlesticks themselves basically allow us to paint a picture. So for some people, and this is something we are going to go into further down the line, is that they create patterns. So you can see here that this price has been moving like so and done that. And as you can see, the bottoms and the lows of these have created a level, meaning that price was bouncing off this level, it's finally broke through. So some people might anticipate that price would come back up to here and drop. Now, that's not to say that this would be the case, but this is basically what candlesticks do. They create patterns for us to identify and trade. That is all that they do. They leave a footprint of what price has previously done and then allows us to make decisions based off what they've previously done to see what might happen again in the future. Okay? So, when it comes to the candlesticks, what are they important for? Well, they're important for telling us who's in control of the market. Now, there's one thing regarding price action, and price action is basically the reading of candlesticks, is that some people will trade it, some people don't. There are many ways to obviously trade the market. I personally like putting limit orders. So, for example, I might assume that price wants to bounce here, so I would set an order here rather than physically reading what price can do. But again, that comes down to the individual who is trading. So candlesticks are good for patterns and they are good for potential entries. Now let's go into the entry and see what we can identify. So I'm just going to rewind to this part here and just have a look. So if we have had a situation where price has created a green candle at an area that we are looking for sells, for example, and then the next candle does this, what do you notice about the size of this candle and the size of this candle? The size of this candle, the body is larger and it has eaten or engulfed the previous candle. This shows that the sellers are in control of this market. Now, that isn't to say that we would just sell the market, because as you can see, the market has pushed to the downside, and our aim of the market is to obviously buy low and sell high. So we are selling low here. Okay, so we don't want to be doing that. But it shows a good example of an engulfing candle. This engulfing candle basically means that the sellers are in control in this period. If we were to look back and see something like this, remember how I said in the past that price had potentially created a level at this area here? This area shows that price has been trading at the level. Sellers have now engulfed the previous candle, and this then means that sellers are potentially involved. And if you then see what happens, price then pushes down. So that's an example of a bearish candlestick. Now let's have a look at a bullish. So guys, in this example here, what I want to basically break down is a kind of buy example that you might potentially use. So as mentioned in the past, once a level is broken, you might want to see that retested. And that is basically what people might look for. So if we identify a level here, sorry, that's the wrong tool. If we identify an area here that was broken, prices then come back into the area, and we are assuming that we want to see price engulf the previous candle. So as you can see here, this was the candle. The previous body closed above the previous and engulfed it. Therefore, you could see that as a reason to buy. So basically, the use of engulfing candles is that if price is trading in and around an area that you are interested in, then you can potentially use this to benefit and gauge an entry, which could look something like that. You could put your stop loss above the level, and you might want to target something like the high. That is a very valid kind of thing that you could look for in the market. Okay, so all it comes down to is finding areas of interest within the market, using the patterns that the price prints, and then following that, you can use the candlesticks themselves to identify that price is obviously going to go in the direction that you want it to. Okay, another thing that I want to show you in this example is rejections. So as you can see here, a rejection is basically just, if I get the pen, basically just this right here. and let me change the color of it like so. This is basically rejections. This basically shows that price has come into the level, and these wicks show that price is failing to push lower. So price itself is telling you that it is failing to push lower due to the fact that it can't close below this level. So price has shown you that it doesn't want to close below the level. It's then shown that the buyers are then looking to step in and get into control, and then therefore following that, you are obviously able to potentially enter a position. Okay, and that's basically what it boils down to when it comes to price action. It's simply just the actual signs that price gives you. If price shows you that it wants to push up by leaving rejections at levels of interest with engulfing candles, it's the perfect entry, in my opinion, if you are using that method of trading. The last thing that I want to do is basically show you what I personally use when it comes to candlesticks and how I use this to benefit my trading. Now, when it comes to the last section I'm going to go over, it's basically going to show you why I took this position yesterday, which has gained over 70 pips from my point of entry. So, we've understood the candlesticks, we understand the bearish engulfing, bullish engulfing, which is obviously the buy and the sell candles. Now, what is one thing that I want to go over? So, when I am looking at the chart, the biggest thing that I am looking for is the size of the rejections. The size of the rejection implies to me that there is going to be another reaction there in the future. Okay? So what I basically want to do is just highlight some of these wicks at the bottom of candles, whether they're buy candles, sell candles, it does not matter. But if you find that there are key levels within the market with these big rejections, this is something that I personally look for. So what I've done now, I've quickly just marked off some key levels that could be of interest and the wicks, and I basically just want to show you the thought process. So for me personally, as mentioned, these wicks imply that price got to this level and there was a large reaction. So if we look at this here, you can see price pushed down and there was a large reaction. What's then happened again in the future? Price has come to this level, hit it, and there's been a large reaction. And that is basically exactly what I look for when I am trading. Key level there, what's come done, price then came back here, big reaction. Doesn't necessarily mean it's going to happen every single time because you've got things like, news and stuff like that. But overall, it just shows you that these levels are highly respected. As you can see here, you had one there, but then what happened when price came back to the level? You actually saw that this happened. Okay, so it's basically just identifying these areas of interest, and this is how I personally use candlesticks. When it comes to looking at the candlesticks to enter the trades, I don't do that. I actually will set limit orders like so. So the trade I took yesterday looked something like this, and then obviously I'm still in it now, and obviously targeting the low at 5 to 1. So when it comes to this here, I am just looking at these candlesticks, identifying previous large reactions, and then using the future to identify where these reactions might take place in the future. I am not looking at the market and seeing, is there these candlesticks? Because this is another thing I want to go over. Sometimes you will see a candlestick like this, which is a bullish engulfing, showing you that the buyers are in control from a low. So you've got multiple reasons. And then what happened? It never even went into profit. It just pushed down and lost. So for me, I like to kind of predict where the market may react in the future, as opposed to trying to get into positions just based off what price is telling me. And that's personally how I do it. So that is basically candlesticks broken down. Obviously, we are starting to get a little bit more advanced now, episode by episode. We're not just going over super basic stuff. The next episode will be on how to analyze the market. So if you are interested in that, do make sure to subscribe. Any questions, please just leave them in the bio and I'll get back to you. All links to everything are as well in the bio. And yeah, I will see you guys in the next